Dear students, hope you all are fine. And today we are going to discuss the advanced information for July 2022 ICAEW Corporate Reporting. I'm sure you guys are working hard and you are sending me the scripts for reviews, okay? Because in this paper, there is not normally there are two major issues. Number one is the time management. Normally students can't complete this paper on time. And the second issue is they don't know what to write, how to write. This is the biggest issue. So it's better you send me the script and I'll mark it, right? Now, as you all know that since last three to four attempts, they have started sending the advanced information for question number one. That means the data which is in front of me is the data given by ICAEW team. It's the public data. Even you guys have this. And I would recommend you to read it first before this class. Read this PDF file before this class. I'll also send you, even I think you must have this. So just go through this first. And in this data set, they have given you 11 months data of that company. And in the examination room, you will get the 12-month data, right? Okay. So I have observed this, that after this change, passing rate of ICAEW corporate reporting is improved. Now students can clear easily as compared to the past, right? Now, one more thing I would like to say, I'm just going to discuss this advanced information, and this is the first class. In the next meeting, we will be giving you the inflow software things as well. So right now, I don't have the exam question paper for this. I'm just predicting things. I'm just discussing it. So don't consider it last words. Like you don't expect whatever I'm saying will come in the exam. It's not possible. Okay. So this is my disclaimer first. And one more thing. Some students think that inflow software is the total ICAEW paper. No, it's just max 15 marks, 14 marks thing. Still, you have 85 marks of other papers. So I've seen many teachers from UK, they always recommend this thing. They say that practicing past paper is the key. You must have grip on all areas, right? So 85 marks also other than this inflow software. So just this inflow software is not your paper, right? Now, this is just the introduction. You just need to go through it, and just I've just told you whatever written here. Now, this is the story. You are an audit senior working in MFE LLP, and normally in the question number one, we are basically auditors. So right now we are working in audit firm. We are auditors, not client, right? So you have been assigned to the audit of Gazelle for the year ended. This is your accounting period. Always mark your accounting period, 31st December 2021. Gazelle prepares its financial statement in accordance with IFRS. Okay. You receive the following email from audit engagement partner, manager Sam Kota. This is the date. In April 2021. Now wait, what's your accounting period for this question? Your accounting period is ending in 31st December 21. So this is your accounting period, 1st January 21 to 31st December 21. Okay. Now, in April 2021, MFE was appointed as, we are MFE. We are the name of our audit firm is MFE. Was appointed as Gazelle's auditor. So this is our first year of audit. This is our first year of audit with this client, okay? So now you better know, last year the auditor was different. So we need to rely on the data of for opening numbers, other auditor. Similarly, as this is a new client, so we need to assess the risk. We need to understand the system, the business systems, what are their internal controls, what are their systems. One more thing, we need to check whether do we have expertise, do we have such experienced staff, those who have already worked in this line of business. Because just think, if you may be possible, you guys are working in audit firm. So for audit firm, the banking sector partner is different, service sector partner is different, manufacturing clients are different. So in audit firm, there are different experts. There are different experts in audit firm. So do we have this level of expertise? We need to consider this thing as well, okay? And we need to understand the system, the business of this, because this is our first year. Now, shortly, after I had an introductory meeting with Paul Gazette Finance Director, I have summarized for you my notes from this meeting, which, okay. Now, Gazelle has been slow to provide the nominal ledger data. See, this is a risk. Now, the client is not fast. Client is very slow in providing you the data. Client is very slow in providing you the data. So that means this can stop your speed. This can make you difficult to cover things in deadline, right? So this is one of the inherent risks. Okay, they can give you something related to this in the examination room. Therefore, the audit for the year ended 31st December 21 is scheduled for July 2022. Now that means we are doing audit after 6 months. But this is a good news as well. When you are, just think, your accounting period is ending on 31st December 21. The year for which you have to do the audit is ending on 31st December 2021. But you are doing audit in July 2022 for that year. So that means after 6 months, you can check variances. You can verify variances on many things. Like, for example, there are some estimation which the company, which your client did. There were some estimations which your client did for the year ended 31st December 2021. And now after the year end, the actual data you have. So you can check, you can verify their estimation skills as well. So this is a good news as well. In May 2022, MFE started planning the Gazelle audit for the year ended 31st December 2021. An MFE audit assistant prepared a working paper using some information from the year ended 31st December 2020. He also included the information about the current members of the Gazelle Finance. Okay, now this is general discussion, no, not specific. Gazelle management has now provided MFE with the nominal ledger data for 11 months. See, I told you in the advanced information, you get first 11 months data. This has been imported in the data analytics software. Yes, this is inside your software as well. Now, the nominal ledger data for full year for the will be available for the final audit visit in July 2022. Yes, that will be given to you in your examination room. The 12-month data and the complete data set you will get in the examination room. Okay. Now, before the final audit visit, I would like to review the notes of my introductory meetings with Paula. The nominal, okay. Yes, the audit materiality has been set at 105,000. Now just think, this is the audit materiality. So definitely, as we have seen, there are some inherent risks. This is the first time with the clients. So the performance materiality should be lower. Performance materiality should be lower than that. Okay. And whenever we see a client as a risky client, whenever we see any client as a risky client, we reduce the materiality level so that we do more work, we do more detailed work, right? So please have a look. And I've already told you it's better you read this document before you attend this class. Okay. Now, this is about their business operations. What they're saying, notes of introductory meeting with Paula. Gazelle is a recruitment agency for clients in the science, clinical, and engineering sectors, right? Okay. What we do, we are service providers. We find employees, and we provide to different companies, okay, right? On different terms. Now let's see what are the terms. The services Gazelle offers is permanent job recruitment services and supply of temporary contracts in the UK and in the rest of Europe. See, few points. Obviously, as we are linked to service sector, so normally, if you know IFRS 15, you know in service sector, it is difficult. It is judgmental to book the revenue. So there is a risk that they have booked wrong revenue. They have booked wrong revenue, increased revenue or decreased revenue in their books. Okay. One more thing. They have used the word rest of Europe. So now we have to record some transactions on different exchange rates. There is a Forex risk as well. Forex translation risk, because now when you are selling, when you are giving services to Europe, so definitely your sales is in a different currency, your receivables are in different currency. So you are exposed to exchange rate risk as well as the translation risk in accounting. Okay. You may get something related to that. Now, so there are initially there are two heads. One is permanent job recruitment services and second is supply of temporary contractors. Now let's start with the first one. Permanent job recruitment services, UK only. This is UK. We provide permanent job services for UK only, right? Now, clients approach Gazelle when they need a permanent employee. Gazelle advertises the job and identifies and shortlists the application according to the client's job specification. Okay, that means first Gazelle takes the interview and shortlist. Gazelle charges each client a fee based on a percentage of the successful applicant's starting salary. A sales invoice is prepared for each fee. These sales invoices are recorded in the following accounting codes based on the client sector: 4001 for science, 4006 clinical, and 4013 for engineers, right? Now, there is one risk that all these codes are very similar. For example, if we need to post the sales of science, the code is 4001. If you need to post the sales for clinical, it's 4006. That means all are starting with 4000 number. So there is a risk of misposting. There is a risk of misposting, and this happens practically. This happens practically, that you mispost something. So this risk is there because all are starting with 4000 category, right? Okay, so this is the risk. Now, revenue is recognized when the applicant commences employment with the client. Now wait, you know the basic rule. There are 5 stages in IFRS 15. 5 stages in IFRS 15, and the stage 5 is book revenue. Stage 5 is book revenue. Stage 5 is book revenue. And you know, there is one very famous dialogue. I've made many short videos for that as well. We book our revenue. We book our revenue. Listen to me. When performance obligation is satisfied. When performance obligation is satisfied. Okay, so this is the key. Sometimes performance obligation is satisfied in one shot, and sometimes you book overtime revenue because that obligation is satisfied over time. That's the key. Now, revenue is recognized when the applicant commences employment with the client as part of the terms of the business. Gazelle offers a full refund if within 3 months of appointment the applicant leaves the client's employment. This happens rarely, that means very less, as Gazelle is very experienced in recruitment. Now, this is very important paragraph. Have you ever heard about variable revenue? Yes, you have studied the standards also. So you know the variable revenue. This is the example of variable revenue. I hope you remember the lecture. Do you know in the recent IFRS 15, after the launching of IFRS 15, they have included that sale or return basis. Yes, they have included sale or return basis as a variable revenue. What is sale or return basis? For example, I have this new product, so I want to give it to retailers. So I'll go to the retailer and I'll say the retailers, okay, keep this my product, keep this product, and if you sell it, okay, give me money, otherwise return this product. That means I have given right to return to the retailers. Okay, so now there is a possibility that these goods will be sold, and there is a possibility that these goods will not be sold. So now, according to IFRS 15, this transaction is a variable revenue transaction. And now listen, according to the new IFRS 15, variable revenue is booked according to expectation. Variable revenue is booked according to expectation. What do you mean by according to expectation? According to expectation means there is a highly likelihood, high probability that we'll achieve that variable revenue, then you can book. That means there is a high chances that no reversal will happen. No reversal will happen. Hope you remember. Okay. Then you can book the revenue. So now here the refund is the same thing. Refund is the same thing what variable revenue is. For example, if that guy, right now we don't know, right now at the time of initial dealing, we don't know that the employee will leave within 3 months or not. Within 3 months or not. If employees leave within 3 months, then we need to give refund, otherwise no. Okay, so this should be dealt according to variable revenue. And I have already told you that variable revenue is booked according to expectation. So now what you need to do, you need to book a refund liability. You need to book a refund liability, my dear students, according to expectation. According to expectation, but as it is written in the question that there is a very less chances, rarely, the word rarely is written. So right now, no material refund liability is needed. Okay, but yes, examiner can play in this area regarding refund and all. Okay, now okay, now one very interesting issue here. There is a good news here that we are doing audit in June 2022. Listen, we are doing audit in June 2022 and our year end is 31st December. And we are doing auditing for 31st December 21 and we are doing it June 2022. So just think, we have to audit for last year because financial reporting is always for past. So now as an auditor, we can verify these refund liability issue very carefully. There is a possibility that your client, the Gazelle, had estimated some refund liability at 31st December 21. So you have to, as an auditor, you have to check the next 2-3 months records, that what about that refund liability, what they thought, what they calculated at 31st December 21, implemented in January or Feb or not, what is the variation. So in this way we can check the risk. In this way we can check the ability of client to do work on these judgmental issues. This is also a very good thing. Okay, that we are doing audit in June 2022 for the last year, so it's a 6 months lag, 6 months gap. So this is a good thing for auditor to check their judgmental skills of client. Okay, and plan accordingly. One more thing is we have to check, as this is our first year with this client. So we don't have any knowledge of this refund issue, and this refund is total judgmental. So this is also one of the risks. One more thing we can predict. Listen, there is a possibility in the exam room when you get the 12-month data, in the examination room when you will be getting the 12th month data, they give you a requirement like this, that we have changed the refund period from 3 months to 6 months. 3 months to 6 months. Okay, so now in that case you need to apply the implications for this. Okay, and obviously when you change it, then this is considered to be a change in accounting estimate. So they may ask something related to this. It is a possibility. Possibility. One more thing I would like to discuss, that see these codes are similar: 4000, 4000, 4000, 4001, 4006, 4013. So I just told you there is a risk of misposting. So if you mispost anything, so there is a possibility that whole revenue chain will be booked wrong. Why? Because there is a possibility for science, our revenue booking policy is different. For clinical, our revenue policy different. And for engineers, revenue booking policy is different. So if you change the class, whole things will be disturbed. Whole thing for revenue will be disturbed. Okay. So this was the client's first businesses to giving permanent job recruitment services. Now, second thing, supply of temporary. Now, we also provide temporary contractors in the UK. Listen, clients approach Gazelle when they need staff on a short-term basis. Now, this is a separate line of business. Gazelle has a responsibility for providing a suitable temp to the job specification approved by Gazelle's client. Gazelle provides temporary clients, temp clients under the following methods. This is method 1, this is method 2. Temps employed by Gazelle, UK only, and company temps, UK and rest of the Europe. So these are the two different methods for temporary service contracts. Now let's study what are they. This is the method 1. This is going to be the method 1. Let me enlarge the screen. Please listen very carefully. The temp is the temporary employee. Temp means temporary employee. The temporary is employed by Gazelle for the duration of their work for Gazelle's client. Now, what is the scenario? In this case, Gazelle hires the employees. Now, that means these employees are the workers of Gazelle, right? Gazelle provides all payroll and human resource functions relating to the temp. Now, that means Gazelle is responsible for pay. Gazelle needs to know all employment laws, because in UK the laws are very different. Tax laws, NIC laws, okay? So for all these things now Gazelle is responsible. So auditor needs to verify that all these things are calculated, pay, NICs, and all these things, the rates of pay are calculated correctly or not. This is thing. The employed temp submits a weekly, monthly income sheet to Gazelle, okay, which sets out the hours work for Gazelle's client. The timesheet is authorized by Gazelle's client before submission to Gazelle. Okay, so what is the process? Very simple process. Employees go and they work for number of hours, and they take a timesheet, and that timesheet client that client sent to the Gazelle, authorized, and then Gazelle pays to their employees. See, Gazelle pays the employed temp an agreed wage, net of all relevant taxes. See, the taxes are the responsibility of Gazelle, right? So this is the risk. The gross wage cost is recorded in account 6002 temp cost UK, 6002 temp cost UK. Now, there is one thing is written that only authorized C, which sets out hours worked by the timesheet is authorized by Gazelle's client. So whenever it is written that we work for only authorized, so now there is a risk of fake authorization. Or what if there is a collision between employees and they start, this is very routine in many countries, especially in government organization where there are corruption. So what is the process? That they do fake authorization, or they start booking ghost employees. They start giving extra salaries to the people we know, right? Like collision. So this is the risk. This is the risk. That what about the unauthorized transaction? What if they are giving salaries for unauthorized transaction? This is the risk. Don't forget. Okay. Now, Gazelle accounting system generates a sales invoice when the employed temp submits their online timesheets. The accounting system uses agreed fees per hour for the services provided to the client by the employed temp. The sales invoice is recorded in the account code 4000. Now, what happens when we get the approval from the client, and when we pay to our employees, and then the very next step is we send invoice, because now we have to collect amount from our client. Now Gazelle needs to collect the amount from the client. Okay, now they send. Now what if there is a fake timesheet? Just think, if there is a fake timesheet or unauthorized number of hours recorded in the first step, So obviously we'll send on the second step, we'll send the invoice, and definitely now that invoice will not be authorized, will not be accepted by the client. So there is a risk of bad debt. There is a risk of bad debt. And you know what is the risk of bad debt now? Bad debt is linked to receivables, and receivables is linked to IFRS 9. Receivable is financial asset. Receivable is linked to IFRS 9. So you may get impairment of financial asset. You may get impairment of financial asset in the exam. Okay. Just think, if I get wrong or unauthorized timesheets, on the basis of those timesheets, I have paid to my employees, and now I am sending the invoice. Now I am sending the invoice to my client, and the client is saying, no, this is wrong invoice. So definitely now client won't pay. So I need to write off this amount. So it's all about impairment, implications of financial asset. So this is also, this may be the risk as well. One more thing we need to check is that is the cutoff issue. Now listen, when we receive the timesheet, when we receive the timesheet from client that this employee worked this much hours, then we pay to employees and we record our expense. Okay. So what if there is a risk? Just there is a possibility that employees worked in the month of December. But unfortunately, or by any reason, we received the timesheets in January for last month. Okay. So in that case, there is a risk that we have booked the NICs and all these things in January for the last year. Okay. So there is a risk of cutoff. That means we can defer our expenses. One thing. Now the second risk. Now when we have received last year expense timesheet this year, and we have recorded the wrong expense this year, and then now we'll do the sales invoice. We'll send the sales invoice to our client. So that means that invoice is also late. That invoice is also sent late, and our revenue will be booked next year. That means last year revenue will be booked this year. So there is a risk. There is a risk of understatement. There is a risk of understatement of revenue. There is a risk of understatement of revenue. One more thing. Now, this is very logical and very good, just for audit perspective and related to your software. Listen, there is a correlation. There should be a correlation between the revenue and expenses. This is very simple thing, because the more employees we'll provide to our client, so it will automatically increase our salary cost. And on the other hand, we'll charge from the client, so it will also increase our revenue. So there should be a correlation between the salary cost and revenue, direct correlation. So we can use a pie chart for that how much our expenses are increasing and how much revenue is increasing. So there should be a correlation. In this way, we can use smart tools to audit this. Okay. So these all are the points relevant for this method 1. Temps, see the heading, temps employed by Gazelle. Temps employed by Gazelle. Now I would like to highlight one point regarding to the last page. I have missed it. Let me tell you. This paragraph. See this. This is about permanent. I'm going to on the last page. Okay. In the early April 2021, Gazelle appointed Gary Kale as a new director and head of permanent recruitment. See, this guy will deal with permanent recruitment employees. Paula told me that the board expect Gary to introduce some changes. See, some changes. It is openly written in your advanced information file that some changes are going to be introduced. Some changes are going to be introduced. Right? Now, in that case, students, look at me. Some changes are going to be introduced. Look at here. So now in the exam, they might give you this question. I just told you about the change. That refund was 3 months. Refund if the permanent employees leave within 3 months, then we need to refund. So what if they change the period to 6 months? So yes, there is a possibility. One more thing I would like to add here. As it is written, Gary Kyle is a new director. Gary Kyle is the new director. So there is a possibility that he or she does not have proper knowledge of this sector, So there is inherent risk as well. There is inherent risk as well, right? So auditor needs to be very careful in this case. Auditor needs to be very careful in this case. Now, for temporary employed, there were two things. There were two headings. Number one, temps employed by Gazelle, and the method two. Now we are moving to method two. See, this is the method two. Method two. Let me enlarge. It is written company temps, UK and the rest of Europe. Listen now, read the contract terms. A company temp is an individual that provides their services to Gazelle through their own limited company. Now there is a, now listen, now we are the middleman. At one side we have company temps, there is a company. At one side we have a company and the other side we have a client. Okay, so now we'll just connect two peoples. We'll just connect the dots. We'll just connect this company with our client. So now we are working, I think if I'm not wrong or I'm partially correct, that we are working as an agent now. We are working as an agent now. And in your basic studies, you have studied that the agent can't book the complete transaction in their own books. Agent can only book commission, the net benefit. Okay, so in that case, now see the scenario. Now the company temps limited company has responsibility for paying all relevant taxes to tax authorities under tax. Okay, so in that case, we this is not our headache. NICs and all, tax pay and all, this is not our responsibility. No employment laws, we are not responsible. Risk is less. Okay, but yes, we have to deal with obviously a company. So the companies matters. If you are taking services from a company, whatever the UK law says, that you have to follow, right? But not employment laws, not our headache now. Now the company temps limited company submits a weekly, monthly invoice to Gazelle for the services that company temp has provided to Gazelle's client. Okay, Gazelle's record purchase invoice in account code 6002. Now this is a purchases for us. Now these guys are not our employees. UK code 6007, temp cost Europe. Okay, for UK the code is 6002, for Europe is 6007. Again, there is a risk of misposting. Both are starting with 6. Just there is a risk. Okay, now one more thing, as now we are providing services to Europe as well, so there is a forex translation risk as well. Now auditor, I hope you guys remember IS 21. I hope you guys remember monetary non-monetary transactions lecture. So now auditor needs to check whether the correct exchange rates are used for the translation of currency, correct timings, average rate, year-end rate, you have seen. So these things must be checked very properly. One more thing, now as we are dealing with the other rest of the world, so we need to have some knowledge of foreign taxes as well, that what are the implications in that country about such businesses. I'm sure you all know, you guys are senior students, you all know about the residency issues. Okay, so what are the residency issues, what taxes we have to pay in Europe. And sometimes there's one thing which we call double tax relief, DTR. Just think, as you are doing business with Europe, so there is a possibility you are paying some tax in Europe And now again you are paying the tax in UK. So these that means double tax. So government sometimes gives you double tax relief, which we call DTR. So you must know all these implications if it is relevant. Now, ICAEW prepares a sales invoice to its client for the services provided to its client by the company temp at an agreed fee per day. This is routine. At one end, we'll receive the purchase invoice, and on the other hand, we'll sell the sales invoice. Now, as we are agents, so now we can't, agent can't record sales and cost of sales. No. We can't book, for example, from one end, we have to pay $10 per hour rate, and on the other end, we will be receiving $30 per hour, just for example. So now we can't do this presentation that first we'll book the sales of 30 and then we'll book the cost of 10. Okay. So no, not like this. If we are agent, suppose, just think if we are agent, so just we need to book this direct difference. We need to book this direct difference. We need to book this direct difference in our income. Okay. If we are agent, think like this then. And one more thing, this is recommended by many other tutors as well. Even one of my friend also suggested me, he teaches in UK. So he told me that in this paragraph, there is a hint of agency. So students must read the agent related IFRS 15 agent related instruction. You can read from the main IFRS book as well. The sales invoice is sent to ICAEW's client for approval. The sales invoice is recorded in ICAEW's accounting records when it has been approved by ICAEW's client. Sales invoice are recorded in account 4000 TEM and 4007 for Europe. Now, again, this is the risk. This is normal risk that first they are sent for approval. So for example, for instance, we have provided services in December. But for example, we have sent for the approval and they approve late. In the next year. So there is an issue of cutoff. That now the last year revenue will be underestimated. Last year revenue will be decreased and the next year revenue will be increased. So these issues, there is a possibility of these issues. Okay. Now, occasionally, ICAEW's clients are slow to approve sales invoice for payment in respect of services provided to them. Now, this is a risky thing. If clients are slow to approve the invoice, Paula prepares a manual, risky. See, manual entries are also there each month to accrue for unapproved sales invoices. See, this is a risk. Now, when we see that the client is very busy and the client is not replying, so what we do, we make the entry. We make the entry see, receivable accrued income is receivable debit and sales credit. Okay. Accrued income itself is a receivable. When we see that client is taking time and the month has already going to pass, so we make this entry and we make the manual entry on this. So now, what are the controls for this manual entry? Is this manual entry approved by 2 or 3 people or not? What about the segregation of duties? Lot of things may come like that. And they are doing this manual entry, receivable debit, sales credit. Okay. Now, what is the next step? See, you can see the entry. Because account code 4000 is for sales. See the screen. Account code 4000. So they have credited the sales. Just like I did, and they have debited the receivables. They have debited the receivable, like accrued income is your receivable. Okay. Now, when the sales invoice is raised and processed, Paula enters a reversing journal entry to remove the accrued income. Now, when we actually get the cash or we get the actual sales invoice, then we reverse this accrued income thing. Wait, Initially, we write accrued income, and just you think, afterward, we convert this accrued income to a real receivable. Afterward, we convert this accrued income, we make the entry receivable debit. Look at here. Although accrued income and receivable is same thing. Accrued income and receivable is almost same thing, but again, if we go with the terminologies, afterwards, when we send the actual invoice approved, then we make the entry receivable debit and accrued income credit. Now, what is the risk? See the risk. Now, these things are done manually. Just think that before a month, we book sales for this transaction. And what if after when we were issuing the real invoice, what if we make the entry receivable debit sales credit again? So that means there is a risk. There is a risk of double counting of sales. There is a risk of double booking of sales, and that means your revenue will be increased. That means your revenue will be increased. If these people forgot to reverse the accrued income, and the second time when they are sending the official invoice, if they treat it as first time, so there is a risk of double booking of revenue. So don't forget this point. This examiner can play with this point. One thing I can repeat here related to the first type of temporary temps employed by Gazelle, that what if now there are two entities. We are in the middleman. At one side we have the temp company, and the other side we have the client. Okay, so now what if we receive late purchase invoice from this party? So obviously we'll send the late sales invoice, right? So in that case, there is a possibility of cutoff. That means we'll be booking everything next year of last year. So there is an understatement of purchases and an understatement of sales. Understatement of purchases and understatement of sales may be there, right? Okay. Are you getting? Now the next page, please. Exhibit B, working paper. In addition to employing temps for its client, Gazelle has its own core staff, including directors. Now, see, in 20, you can compare it with 2020. Recruiters for permanent job is 10. Now it's 9. Recruiters means our own people. 18. Now this has been improved. This is our administration guys. So 42. Last year we have total our own employees of 42 employees, and now it's 43. Now employed temps, the short-term employees we hired to send them to the other clients is 198. Last time it's 207. So the total number is 240 and 250. Now, next thing, calculation of gross profit. Calculation of gross profit. Now, I have prepared the following analysis using the information from the data analytics software for the year ended 31st. Wait, this is 31st December 2020, the last year data. The analysis shows how the revenue and cost for UK temps are recorded in account codes 4000 and 6002 respectively, and identifies the gross profit for supply of employed temps and company temps. This is majorly linked to the temporary contracts. Okay, so you can see this is your sales for employed temps. This is for company temps. Total sales you have. Now, for employed temps, as they are your employees, so see the word payroll, the payroll cost. The word payroll is now. With company temps, we are just taking services from a company. We are just taking a service from another company. In that case, this is not going to be our employees. These 7546 are not our employees. Okay. Now, one thing, company temp, purchase invoice, purchase and manual journal for accrued income. This is a big question mark. What this accrued income is doing, accrued income, what this accrued income is doing, what this accrued income is doing with the expense side. So there is this should be investigated. This should be investigated. This should be investigated. Okay. Now less manual journal transfers to account code 7003 core staff salaries. So these, let us say these are your staff salaries. These are your staff salaries 2033. It's basically C3 zeros. So you can calculate your last year salary per employee as well. I repeat, manual journal transfers to account code of 7003 core staff salaries. Core staff means our own staff, not temporary staff, own staff. So our own staff is 2033. Wait, 2033 000 2033 000 2033 000, and this data relates to last year. See, 31st December 2020. This data relates to last year. So last year we had 42 employees. We had 42 employees. Wait. So can you calculate per employee salary? 2033 000 divided by 42. Come on, do it. 2033 000 divided by 42. So it's 48404 pounds per year per employee. Per year per employee. See, this is the salary for our core staff. Core staff means our own employees. There are certain, we have a team of, we have many temporary employees as well, but they are not routine employees. We have routine employees last year 42 and this year 43. So the salary, see, manual journal transfers to account code 7003 is 2033, and this is the last year data. So if you put this in numerator, if you put this thing in numerator and then divided it by 42 employees, so you will get 484004. Please have a look. Now, one more thing you can do here, you can calculate the GP margins. See, for employed temps, this is your gross profit, this is your sales. So GP upon sales into 100, you can calculate it. Again, now this is for your company temps, GP, this is sales divided by 100, and then finally you can calculate the total as well. You can calculate the GP margins as well. See, for the first employed temps, what will be the GP margin? 2216 divided by 8116 times 100. You will get the percentage. Company temps you can calculate, and for the total as well. This may also help you in exams. Please check. Now, members of Gazelle finance team. See, now the first lady is Paula. Paula is an ICAEW chartered accountant. See this word. This word has a message. This word has a message. ICAEW chartered accountant. This is very simple and very, very common in ICAEW past paper. That means she must follow ICAEW code of ethics. So there may be some ethical ethical things, integrity issues may be tested in exam or like that. So get ready for this. Now, she's head of finance function. Paula is responsible for production of financial statement, quarterly management accounts. She processes all types of accounting entries, but mainly manual journals for accrued income to the receivable account. Account code 21C. She is responsible for that accrued income thing. The second lady is Arina Oliver. Arina has worked for Gazelle for many years. She's experienced in payroll preparation of all her aspects of HR. Arina processes payroll of both employed temps and Gazelle core staff, right? Now, Alina records wages journal and posts gross pay for employed temps for Gazelle core staff total 6002. Now this is the responsibility of now Leo. Leo generates and posts sales invoices for permanent jobs recruitments and responsible for credit control receivable. Leo is responsible for processing and paying purchases invoices received for company temps. These invoices are recorded in account code 6002 UK and account code 6007 for Europe. That means Leo is solely responsible for all purchases invoice. So now when she is responsible for all, see there is some sort of segregation of duties like Leo is responsible. Listen to me very carefully. Leo is responsible for these purchase invoice in company temps, because in company temps from one end we have to book purchases, from one end we have to book purchases. So now when this work is solely done by Leo, so if you have used, and in the next meeting you will be seeing the inflow software, so we can apply the filters. We can apply the filters on all the invoices, and we can extract many things out of it. We can check many things using the filters, that what are the discrepancies. Okay, now this point is important. Gazelle recognizes there is an internal control weakness, as Leo is responsible for both recording company temp purchase invoice and for generating sales. She's doing multiple things. At one end she's dealing with the purchase, and on the other end she's doing with the sales. Paula Elite has oversight of this process, and in a small company such as Gazelle, it is not always possible to achieve segregation of duties, right? That means one guy is doing multiple jobs. So there is lack of control, and this increases the inherent risk, right? So in the exam you may see things like that. On monthly basis, Leo Neom transfers an amount representing the cost of Gazelle's core staff from account code 6002 temp cost C. They do this transfer as well. Now what is the risk here? There is a possibility that they might, for December salary, they are doing transfer in January. For December's last month's salary, they are doing transfer in January. So there is a risk of understatement of expenses in the last year. Just the cutoff thing, the last year thing is booked next year. So some sort of these type of things may also come in the exam, right? Okay, so now you guys are requested to read this document again, right? And we'll also send you the class for inflow software, and be confident. Try to solve maximum in the last 3-4 days. Try to solve complete papers, 3 to 4 complete past papers, and then in the examination room go for the 5th one. Okay, in this way you can clear. I'm telling you the past. Just 4 days before exam, daily do 1 past paper. So if you do 4 complete past papers, 4 complete in examination situation, right, then you can perform the 5th. Otherwise it will be difficult to time manage. And yes, when you will be doing the mock papers or the past papers, complete past papers, sometime it will demotivate you that I can't do. But yes, it's okay. You are doing training. You are training yourself for that big war. Okay, so best of luck for your exam, and take care.